has reported a steady Q3 FY26 performance with revenue, EBITDA and PAT largely in line with expectations. My colleague Shrishti is joining in with more details from Q3 results.
Well, yes, inline set numbers coming in from M&M. This time around, we have definitely seen the profit has come in line to what we were expecting at ET. Now, revenue too is in line to what we were expecting at close to 38,517 crores. And even the margin figure, we have seen the margins too coming in line to what we were expecting. The margins now stood at 13.7%. That indeed is a fall on a YOY basis. And along with that, do mark the one-time labor code impact of 293 crores in the earnings this time around. But along with that, with respect to the market share, the company is saying that they have actually the tractor market share now stands at 44%. That's actually down 20 basis points. And along with that, the SUV's revenue market share that has jumped 90 basis points to 24.1% this time around. Yes, the company has gained some market share in the auto side, but with respect to the internals, what I can really see with respect to the standalone numbers, the auto EBIT margins now stood at 9.5% versus 9.2% this time around, and along with that the farm equipment margins at 20.2% versus 19.7% on a quarter-on-quarter basis, and both of these numbers are actually in line to what we were expecting. So yes, on the standalone business with respect to both the auto and the farm segments together, the margins are at close to 13.5%, but with respect to the internals, the auto as well as the farm equipment margins, they are actually in line to what we were expecting at ET. Now, the company is very well of the fact that the auto and the farm segment has maintained its leadership is what Dr. Anish Shah is highlighting, and along with that, he's also saying, Rajesh Jejurkar is also saying that there has been a stellar response to some of the new launches, and especially on the EV side. So that's the scorecard coming in from M&M, though the stock is a bit down from its day's highest points. Back to you.
Thank you, Shrishti, for getting us those numbers. Now, commenting on the FTAs, Anish Shah stated that while several European models are already present in India, OEMs are unlikely to manufacture in Europe and export to India. Listen in.
But there are various European models in India today. And take any of those models. I won't name specific ones. That OEM cannot make them in EU, pay the shipping cost to send it here, bear the inventory cost for that time period, and have it come to India cheaper than what they already have here. So it doesn't impact us from a comparative standpoint at all. Where it does impact India is if the economy is completely opened up, there is a possibility that people may use unused capacity in Europe to send vehicles to India and close down plants in India. There are manufacturers who announced closure of plants in Europe, but why would you close a plant in your home country when you can close a plant somewhere else? And which is where I would give the government a lot of credit. I think they balanced it really well.